silence! Welcome to my quarterly. Okay. Hi there, I'm Gillian Seguin, Associate Wealth Advisor. Sorry, I don't even know my own position. Associate Wealth Advisor at IA Private Wealth with the Reyes Group. And this is your Q3 2025 quarterly update. I was joking with many of my clients at the end of the quarter saying, I bet you didn't lose any sleep this quarter as the markets continued their upward momentum. Not lots to worry about in the markets, however, still lots of concern in the world from geopolitical tensions and obviously what's happening down south of us with the tariffs. So let's jump into this. On the market front, we had actually Canada leading the markets year to date. This is a big change as we've been a lagger for many, many years, 7 to 10 years plus. So the TSX finished up 11.25% this quarter. The NASDAQ was up 11.5%. The Dow was up 8%, and the S&P, albeit was the smallest gainer, still at 7.71%. The USA saw a lot of strength still in consumer staples, healthcare, and industrials. And of course, the AI trend continues with cloud computing and chip manufacturing. All that technology continues to stimulate the markets. Here in Canada, we saw significant gains in our financials, manufacturing, and in energy. Both those latter two are very cyclical. So we are coming off of that cycle. So I don't anticipate another leg up on those two fronts. Financials will be interesting as Canada is proceeding carefully or cautiously with additional interest rate cuts. But the biggest sort of stimulus in our economy last quarter was the biggest gainer in the markets, and that is gold. Anytime we see interest rate cuts, we will see sort of gold maintain its value. It didn't gain value as interest rates were increasing, but it does retain its value and in essence become more valuable as interest rates are cut. Also, we continue to see gold as a safe haven in unpredictable situations, again, touching on that geopolitical risks and the tariffs. Globally, we are seeing inflation still cooling, although the only area that we could see an uptick is in the US. Still so many moving parts down there. Here in Canada and also globally, there have been a lot of stimulus packages and a lot of support given to those businesses or sectors that will be impacted by tariffs. However, here in Canada, under the CUMSA, we are still very protected and not really implicated by the tariffs. Globally, we could see the countries getting hit between 15 to 20%. But interestingly, in the US, the manufacturers, the large manufacturers, are still absorbing those tariffs. So think of a Walmart. A Walmart has huge price margins and they have deep, deep pockets. So they are squeezing their margins and currently absorbing the tariffs rather than passing them on to their consumers. They are also then in turn taking this opportunity to gain market share. The smaller mom and pop shops that can't do that, they are going to go out of business and Walmart will get that business. At least that's what they are believing what will happen. And that will help insulate a little bit of what they've given out on the tariff side. This won't go on forever though. And when they do start to get passed on to the US, that is when we'll see consumer spending rein in and very likely that inflation could start to tick up again. With the markets all referenced earlier in this podcast up 13 to 22%, we again could see still 2 to 3 rate cuts in the US and in Canada, more likely in the US, to combat that inflation. And finally, going forward, we are still seeing a lot of outflow of capital from the US, and it is pouring into our Canadian economy. Our dollar is still cheap, our markets are appealing, the dividends that we pay out on our large cap Canadian equities are appealing. So I think that inflow of capital is also supporting our markets and also forcing investors to look globally. We're seeing a lot of flow of capital also to the developed world. And finally, the frost is starting to thaw on some of those emerging markets. So that's what I would say looking forward into this quarter and obviously the end of the year. But thanks for joining me today. I hope this has been helpful. We'll see you next January.